Hello everybody. It's 4:44 Pacific Coast time in the United States on Sunday. Tokyo is getting ready to open here, or has opened, I believe, on Monday the 22nd. Today's Father's Day, so I've been a little busy. I meant to get this out earlier, but we're still celebrating Father's Day in the States, and I have my two young kids here with me, so it's been a little hard to free up some time. Anyway, just wanted to go over the post from Friday. Well, actually, I posted it Saturday, but on the Forex Factory thread, do some posting on Forex Factory, and had a couple questions, and then I wrote the question and answers for the trades that I had talked about on the Forex Factory website. Had a setup going into London for the Euro-Japanese yen here. Excuse me, keeps turning into a pencil because I saved these charts and had to pull it up on Paint. Anyway, this had this wedge compressing up against the 134.50. And I tried to post that real quick, but by the time I had done everything, it had already made a break. But it made a nice little break here. Made about a 60 pip run, but this was right before the London session. And I just wanted to point out too that this is, again, somebody had made a comment before about me loving my psych levels, and I do, especially on the Euro yen and the pound yen. More so on the pound yen, it seems to hold up more true. But you can see 34, not quite, but very close to 34. Put up some resistance here, and then the squeeze started to take place against the 34.50. And what I mean by the psych levels, it's those major levels going from 134 to 135, and also these increments. I call these the major psych levels, the 134, and the minor psych levels are the 50s, the halfway point, so 134.50 on the yen and the pound. Seem to also put up a lot of some more resistance here. So anyway, you can see that 134.50 put up a lot of resistance, and then it finally made the break and went up. It's pretty self-explanatory on that one, but like I said, you can always, if it makes a clear move from any of the psych levels, you can always see that it goes up for a couple pips. I'm going to do another post on that because I went back looking through the euro yen chart, and every time it broke a psych level, it just seems like it took off 40 or 50 pips. And so I'm going to go over the chart and see if I can, and then I want to point that out because sometimes I know one of the traders that I used to have a service with, that was one of the things that he used to like to scalp off of, was breaks of those psych levels. And he used Bollinger Bands and moving averages and stuff like that. I'm just not into it. It just never seems to help me at all. I know it helps a lot of other people, and they work for other people. For me, it's just, I'd rather just look at the charts and watch the price action. When I start using all those other indicators, it just screws me up, honestly. But like I said, it's just not for me. But a lot of other people, it helps you with the confidence in making a trade, and whatever you need to do to boost your confidence when you're trading is the most important thing you can do. Because if you don't have any confidence going into trades, you're going to be nervous and edgy and get emotional and pull the trigger or too fast and close it, or you're going to pull the trigger or not pull the trigger and close it and let it stop out because you think it's going to turn around. You just got to be confident in what you're doing. I know I've mentioned that before, and I'll stop so I can go ahead and get over the rest of these charts. The next thing I posted was the pound dollar, and there's that. Had a consolidation, same exact time, going into Tokyo. Had a consolidation going into the pound dollar. Not as tight as I would like to see it. This was tightening up really good right in here. And then it started to get a little spiky. And that's because it was the triple witching hour on Friday with all this bonds and the other long-term instruments were closing out that day. So the market was a little edgy, I think, and it was a little whippy. I didn't really care for the price action that much, but here you kind of got faked out a little bit. It went up, and you could have entered here, but like I said, I like to watch for the candles to stick and hold, and just because it makes a quick run up, that's why you got to just get used to watching price action. You sit here and watch it for hours. And you start to dream about it. Probably half of you already do dream Forex and charts when you're sleeping. But at least the candles made a nice continuation move up, and then this one broke and held a little bit. And this is probably where I would have gotten in, because at the end of the hour that closed above the consolidation line. And you can see here that it did pretty well. And the other thing is I meant to mention is the break of this 6372. 6372 was a long-term was a support resistance line that I've had on here probably all week. This isn't a new line that I just drew or anything. This has been on here. And what I like to see is, especially if they're this a consolidation line or a break of the trend line is that close to a support resistance line, that's another confirmation. I'd rather watch it break that also and hold above that before I got into a trade. So it definitely would have entered in this area once I saw the candles break up above and kind of hover in here without falling back down. What I like to watch for is a small break and then it maybe come back down and hold like this one did, and not move, and this so it goes from resistance to becoming support. And that's where I like to see is that it's sitting there, and then it's hopefully going to want to move up like it did. So that's that. Let me get back over here to the pound yen now.